What is going on, Alpha Hunters? The markets are now closed for the first trading week of October the 4th. All right. So we got some pretty good jobs, employment data kind of throughout the week. It started with the Jolts job openings. We got 8.04 million, which was a little bit higher than forecast. Forecast was expected to come in at 7.655 million, which would have been down from prior month at 7.7 million. So yeah, we had a little bit of an uptick there, even quite a bit of a beat compared to forecasts. And yeah, so that was a pretty good beat. Then it wasn't until Thursday we got the initial jobless claims that came in at 225K. Forecast was calling for 220K, and prior was 219K. So a little bit higher than what they expected, but I think it's kind of within tolerance, within line. It's not like a huge deviation. And then Friday, we got two of the big ones. Unemployment rate came in at 4.1%. Forecast is calling for 4.2. Prior was also 4.2%. So a little bit of a drop there in unemployment. Then we also got non-farm payrolls. This is the one that made a lot of noise there on Friday. Came in at 254K. Woo! Man, that was a great number for the market, and the forecast is calling for 140K, with prior coming in at 159K. So not only did that non-farm payroll not go down like it was expected on the forecast, we shot a higher, way higher. So looking pretty good there on that number. So some of that jobs and data numbers that we got this week actually pretty good. I mean, not like stellarly great, but definitely just not as much of a disaster as been trending over the past several months. So we had a little bit of a gap down though to start the week. Kind of just traded a little bit choppy there. We tried to roll over there, and even Monday mid-afternoon. Then we had a quick bounce, solid bounce into Monday's close. So Jerome Powell was basically talking, and he was making some commentary at that point in time. We had a nice little gap down there on Tuesday, but mostly we just had that huge run there at the end of Monday. But nice little gap down on Tuesday. We just kind of traded lower, broke the weekly lows from Monday, and just kind of chopped around a little bit of a double bottom here. You thought maybe this is going to spur us to go on bullishness the rest of the week. Nope. Come out Wednesday, nice little gap down. That was then the low point. A little bit of a trade lower there initially. Wednesday, nice little bounce, and then kind of chopped around there for the rest of the day. Thursday, when we got the initial jobless claims numbers Thursday morning, it wasn't like the market had too much of a reaction to it there pre-market. Just kind of chopped around a little bit basically throughout the day. Some of these moves were kind of just strong and very trendy at times. That was it. I was kind of wondering, are we really going to see us not have like a bullish move continue higher throughout the week, especially as we're now into October? Or are we about to have some serious breakdowns there on Thursday? Because we were floating right on some major support levels on breaking down. Well, Friday morning, we got the jobs data we got, and nice solid gap up. I believe the SPY gapped up 0.8%. I think the Q's gapped up 1.2%. But we did pull back pretty strong there to start. And I mean, people in the market, especially the tech area of the markets, are taking still every opportunity on any kind of significant gap up to sell out of a lot of stocks, especially stocks that have done well over the past several years. It's just kind of crazy. We're still seeing a lot of that. Not like, hey, you want to be in on this, you want to be buying every possible second you can. Just still seeing a lot of strong gap ups are met with very strong selling at the open. Nice little sideways choppy action there the first part of the day, and then finally got it going, moved back higher, getting back towards the weekly highs there for the close on Friday. Not quite back to the weekly high, but pretty close, and it looks pretty good as we probably go into next week. All right, taking a look at the S&P 500 and sector rotation for the week, and wow, XLE, the energy sector, did really solid this week. I had no idea it did that well throughout the week. But yeah, there you go. Energies led the week. Financials, utilities, communications, industrials kind of all outperforming a little bit there. Tech was in line with the market. Actually had a pretty rough day there on Tuesday, but came back and actually was just kind of flat with the market performance. Healthcare underperforming, discretionary is underperforming, real estate Materials and staples kind of all there at the lower end of the week's performance. Real estate got hit pretty good there on Thursday and Friday, kind of as the week continued to go on, as we saw yields move higher. We'll talk a little bit about that in a second. All right, take a look at the VIX. Very nice, strong move last Friday, trying to bounce off some of these lower levels. Well, definitely continued this week. Nice little hangout day there on Monday, and Tuesday got that pretty strong pop. A lot of selling there came in right away on Tuesday, so we saw a pretty good climb there on the VIX. The interesting thing is going to be here recently. Like, we had a little bit of a lower retest there on Friday. Kind of looks like the VIX wants to continue higher. The other thing is, with some of the recent all-time highs that we've kind of put in here for the past month on the market generally, well, you can see the VIX is not back down to the lows that it was putting in back in the summer. So, yeah, just kind of an interesting spot where the VIX has just kind of found a nice little base level here. So, yeah, we'll see. But the people continue to be protective of equity upside and gains. DXY dollar index. Well, last week I fully was prepared for the dollar to probably just drop off and crater into the abyss. Well, it did not do that. It basically just called my bluff and came out every day this week and just absolutely ripped higher. Just almost like a huge reversal. Definitely was looking at this double top that we had back from early parts of September there on Thursday, and kind of mentioned if we get through there, we're going to have another pretty solid spot where we had some lower wicks back from March and obviously the beginning of August. So that's kind of where we got to there Friday around close. It's kind of where those previous lower wicks were. So my feeling here is this is a pretty strong move. Could just been a very strong rally and a larger downturn, downtrending type of market move. Or this could be a pretty good maybe reversal, and you're probably going to be looking to maybe even buy the dip or look for a pullback spot, and then you're probably looking to be bullish off of it. I think that probably makes a lot of sense to me for now. I think you're going to have a pretty loose stop loss though, just in case this was just a higher move in a longer trend lower. So that's just all I got here on the dollar. I kind of like a very strong move that we had this week. I just want to be probably just looking for a pullback. I wouldn't want to be chasing it right here, right now. GLD Gold Trust. Nice little hangout all week. And that is especially positive, especially for how much dollar DXY. I mean, we just saw it move very strongly higher all week. I mean, gold didn't really drop off all that much. A little bit negative, I think, on the week, just very briefly, but just kind of a sideways, kind of held its own, and looks really good to probably continue higher sometime going forward. Yields. 10-year yield. Another thing that had a very strong week. And you see how strong they were on Friday. Looks pretty good. I still just think they're going to be choppy. I don't see a reason why they're going to go just absolutely on a monster run. But they might be done going lower, which is just going to be really tough to kind of gauge the market, I guess. And then here's a look at the 2-year yield, which 2-year yield put in a pretty solid base there for towards the second half of September. Nice strong move Friday. Look at that huge move. Woo, huge move. We do have a little bit of a ways to run, maybe to possibly get to this low and maybe this little top area. So I mean, if we are seeing yields kind of maybe move higher, I mean, that might make sense to be the next spot to probably come to before we see a little choppiness. And then here's a look at the 30-year yield. What's really interesting about the 30-year yield is it barely even broke this December low, halfway through September. So yeah, I mean, 30-year yield was holding up pretty good. I mean, it had some days where some dogs, in July and August, September, but for the most part, it's held up pretty well. Take a look at that 10 and 2 inversion, and we came dropping right off there on Friday. I'd be curious to see what happens. I mean, this might be a quick retest into that 0 line area, and then maybe we bounce going forward. I mean, we did uninvert, so it kind of makes sense. So you all in one go. So it kind of makes sense to have a little bit of a pullback, a little bit of correction. This is a pretty strong trend that we were on. across the yield curves from basically kind of like end of June all the way to roughly the end of September. So pretty strong move across those yield curves. So it makes sense to kind of, we have a little bit of coming back together. HYG, high yield corporate bonds. You just saw how strong yields have been. Makes sense that, bonds look like they had a bad week because they basically just did. I would expect a little bit more lower move here on HYG. I mean, it's just not sitting really at any support levels. So maybe this level around 79, not 40, kind of makes sense. The other one, LQD. LQD had a pretty dangerous gap. Gapped right below that 50 EMA on a daily time frame, and it just hung out there the whole day. So it didn't really do too much, and I guess I'd be looking for, if this thing just kind of hangs out again on Monday, I'd be looking for the move lower. Probably don't have far to go, probably like to this pivot level, and it's also where it had some other kind of tops before. We basically gapped right on top of this December high that we had back in late December. So, do we have a little bit of a lower push to go? It's possible. If we just go sideways on Monday, yeah, I'd be looking for that continuation. But if we gap up back above the 50 EMA on Monday, I might be looking for maybe a little bit higher retest before probably, waiting to see what else might happen. And taking a look at that TLT, also got a pretty nasty gap down today. It was trading a little bit higher earlier in the morning, but wound up coming back down by the end of the day. And it's kind of just in the middle of no man's land. As kind of mentioned before, like if we break through this low from August 30th, we don't really have much until we get to this little lower wick and kind of some of these tops back here from June, which all that's kind of sitting around that 95 level. Not to say that's a huge move from where it is now, mostly because that gap was just so large there on Friday, but doesn't mean we won't eventually get there. Maybe sometime this next week. And that is also most likely going to be where the 100 moving average is roughly going to be in that area, and the 200 is going to be a little bit below it. All right, taking a look at some of the different markets. We got RSP here forming somewhat of a kind of like head and shoulders type pattern here. And yeah, kind of curious to see if this will play out. I mean, we're sitting right at that shoulder on kind of the right side there. So it's going to be interesting to see if we do wind up coming out this next week and selling down, because if we do and get back below this neckline, which that's going to be a really interesting one, because that'd be below the 20 EMA, obviously the neckline. We got a pretty good pocket to move here. I don't really think that this top from late August would hold it. I don't think we would just wick below it. I think we bounced right there. So if we roll back over, I think you're going to have enough people sitting right below these two little lows for this neckline with stop losses. And I think that'll probably start to trigger a lot of people, probably see the market at least move down to that 50 EMA level. As far as kind of the way we ended the week, it was kind of what I was looking for when we were on the live stream on Friday. Is if we can push higher by the end of day, and it sets up for us to push higher going into next week. And if we get back up to all-time highs, then probably going to really want to start being really protective at that point in time, because the Qs is not going to be close. We'll be having a switch across the RSP, SPY, and the Qs across quarters as well. DIA looking pretty solid. Looks pretty good. Actually, I really like that lower retest that we got on Friday. I like the closed or higher close that we had by the end of day there on Friday. That's the highest close the DIA's had as well. So yeah, I would expect the DIA probably comes out and trades higher this next week. The IWM got a huge gap up today. Nice little lower wick there into the 10 and 20 from that pretty large gap up. It looks pretty good. It probably moves higher this next week. I'd imagine it probably does, especially as most of the other markets are moving higher. IWM probably does as well. So I'd almost expect it as well. Qs. So that's what I was kind of talking about with the RSP is, if we do go on a little bit of a run this next week, don't really see the Qs getting back up to those all-time highs that we put in back in July anytime soon. Like the RSP and SPY could do that in a day. The Qs probably are not going to be doing that in a day. So yeah, I mean, it's going to be really interesting, because I do want to see how the market takes, having a large switch across multiple months, across even 2 quarters, Q3, Q4 trading. And yeah, what will we wind up doing? And then take a look at the SPY. Huge lower wick that came in there on Friday. Gotta like how we closed the day on Friday as well. Looks pretty good. Nice little lower retest all week. Huge gap back up to the weekly highs. This is the second highest close we've ever had. Obviously, this past Monday was the highest close from that huge rally it had at the end of the day. But I would expect us to hit all-time highs there, probably this next week. I mean, we are not far at all. We are roughly a 0.25%, or so. Quarter to 0.3% away from all-time highs. I mean, that's nothing. We can do that probably like in an hour of trading. So I would expect us to probably hit all-time highs this next week. I mean, maybe if something catastrophic happens over the weekend, maybe not. But yeah, probably hitting all-time highs on the market this next week. And then we would have a switch across the SPY and Qs across multiple quarters. And I'm curious to see what that looks like going forward. But that's what I'm be watching. I think we'll probably push a little bit higher, but I think it's just continued great time to probably get out of things that have worked very well over many years, and utilities still look to be a good area. I still like gold. I have a hard time believing that utilities and gold both don't do really good at certain time periods. As far as sticking money into bonds, I actually wound up having a conversation with my uncle this past weekend, and it kind of informed me. So I'm going to probably put out some information in a separate video about bonds, because there's specifics that you need to know if you are going to buy and invest in bonds that you want to make sure you don't screw up. But I still like the bond side. I would rather buy it at the time of issuance and just hold it to maturity. Treasury bills that are 3 to 6 months. That's it. Alpha Hunters, have a great weekend. Take care.